Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Thursday, July 15th, 2010. This morning we're talking about slowing growth, and by slowing growth we're referring to China, who last night reported less than expected GDP figures. However, before you worry too much about the Chinese economy, you want to note that their growth slowed to 10.3%. So that's right, their growth is still above 10%. Now, by contrast, most other economies out there are struggling to get 3% growth. So, right now, there is fears that a slowdown in China, if it gets worse, could impact global demand. But at this point, 10% is pretty good. It's really going to be up to other economies around the globe to show that they can grow as well. However, you hear about some of the austerity measures taking place in some of these places, and you have to wonder if that's going to take place and if that can happen. But right now, China is still the primary driver of global growth. So as long as they can stay above 10%, I think this might be all right for a while. All right, so in addition, we're looking at the Euro versus USD right now. They're trading higher, Euro reaching a high of 128.8 versus USD. Basically a series of debt issues and bond offerings through some of these PIGS countries have been successful. Shows that there's demand for their debt, so the refi problems that they were having may be behind them. In addition, ECB is saying that the current rate policy is currently appropriate. So that's what we're looking at there. Also want to look at the pound. Pound's also showing some strength, although looks like it's giving back some gains here versus dollar. Right now, dollar's very weak. I'll get to that in a second, but in the UK, they were talking about that the Chancellor of the Exchequer, Osborne, came out and he said that the banks may not need additional support. So that's a good sign for the UK, what's happening. But, the big thing we're seeing today is dollar weakness, with the exception of the commodity currencies. Okay, commodity currencies like Aussie versus USD are lower because of this potential Chinese demand problem. However, we'll have to see if that's overblown or not. But we're showing some dollar weakness now. You can see the dollar is weak here versus the yen. All right, overnight in Japan, the Bank of Japan announced a rate decision, left rates rather, at 0.1%, which is no change. No one expected that to change, but they've cited potential global growth problems going forward. Now, here in the U.S., the reason why we're so weak is we had our PPI figures come in, and they came in at negative 0.5% versus an expectation of negative 0.1%. All right, now that's showing that potentially deflation is winning the battle here in the inflation-deflation debate. Now, government spending and stimulus money has attempted to hold prices higher, but this may not be the case for much longer. Now, we're also seeing that initial jobless claims came in at 429,000, which is better than the 450,000 that was expected. But if you're one of those 429,000, you may not think it's so hot. So that's kind of what we're looking at here. We've got dollar weakness. You're seeing euro and pound strength. Although the pound's a little bit mixed right now. It looks like once those numbers came out at 8:30 this morning, you can see that the market really went into a little bit of risk aversion mode at that point. But in addition to risk aversion mode, that there is still some or lack of demand for the dollar, and that really goes to show you what the market thinks of the current policies that we're following here in the U.S. It's one thing to say, we want to continue to spend our way out of this problem and issue dollars, but at the end of the day, the market's responding more favorably to the austerity measures that we're seeing in both Europe and Great Britain. So, people talk about it. Stimulus was necessary; it prevented the financial collapse, and that is true. although I'm sure that down the road economists are going to debate whether the extent of it was necessary, how much they could have done, and I guess in the end of the day, hindsight is 2020. But that was then. This is now. Now we need to really adopt some pro business policies here that are going to help us grow, help create jobs in this country, which is going to help bring back demand. One of the reasons that we're seeing some of this deflation, it's not because there's really a lack of demand. It's because we've just got this oversupply right now, which should be bringing prices lower. But because of government intervention, it's held prices higher. I mean, we've got record low mortgage rates right now. Prices have come off, anywhere from 30 to say 50% of their all-time highs. But nevertheless, housing's weak, and a function of that is that banks aren't lending. Okay, they had to shore up their balance sheets, and if deflation continues, they've got a lot of risk out there. Not to mention commercial lending, and commercial real estate is going to be a problem going forward as well. So, how the government sort of tries to engineer this one is going to be interesting. But I will say this, is that, if you get back to free market policies and you allow things to go forward, take a course of action that's going to happen, okay, you're going to bring back demand. I mean, there's a lot of young people, a lot of other people who didn't get involved in this housing debacle that are sort of waiting for the dust to settle before they jump in. And, those who behave badly, we're going to have to figure out a way that we can give them a second shot at it too. So, I don't know how that happens or is going to happen, but just throwing money at the problem isn't the answer. So that's what we're looking at today. You can see that with the dollar weakness, the market's really voting that they're not in favor of U.S. policy, and as a result, we're seeing some gains elsewhere. So good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.